In the meantime, megacap tech has regained its leadership over the past month. Our next guest warning that the broader market's momentum needs to catch up or a correction could be in the cards. Joining me here, Post 9, Chris Verrone of Strategas. It's good to have you.
Great to be here.
And I may have to break away from you at any moment to go to the news conference, but tell us more about what your headline suggests.
Yeah, I think it's no shock over the last couple of weeks that the momentum underneath the surface of this market probably has not lived up to the expectations of what has now become very bullish sentiment really across the street. And I think the question that we have is, this is a time seasonally where you expect markets to be strong, especially into January. What if the market doesn't live up to that hype? What does it mean for the outlook to 25? I still want to give this market some leash here. I think it's a big stretch to go from a market that might be consolidating to some bearish view for first half of next year. But we're certainly on guard, given that the market seems to be defying the normal seasonal strength here.
How does a technician square the two things that I asked Liz Ann about? The breakout again in mega caps versus the breakdown in essentially the rest of the market. I mean, breadth has been terrible for the better part of the last 10 days. What wins the day? Yeah,
one, I don't think we want to overstate the breadth story. I mean, this is 10 days of a sloppy market after
almost 10 in a row?
Frankly, 2 tremendous years. And frankly, 2024 has been broad much of the year. You've had, call it 70% of the S&P above the 200-day moving average all year long. So I would hardly say that there's been some massive breadth deterioration over the course of the year that leads us to this moment. I think what you do see, as you know, these mega cap kind of Mag 7 type names, which many of them took the last 4 or 5 months off, constructively are resuming these consolidations decisively higher. I mean, certainly the breakout in Apple is compelling here. The breakout in Amazon as well. Microsoft looks like it wants to do it. Ironically, it's just NVIDIA that's not really involved here. And, when you look at the rest of the semis, maybe we shouldn't be so surprised. I mean, none of NVIDIA's friends have been working. I mean, most of the semis... Put Broadcom aside for a moment. Lam Research, AMAT, Qualcomm, AMD. It's probably in a very split tech sector. Semis have actually been among the weakest groups in our work.
Oh, for sure, especially relative to software.
Totally.
But what if this is a bit of a reckoning in that area that, you know what, it's time to sort of put up or shut up. Yeah. Like, let's see what AI really means to your business and to your return on investment, and whether you're a real player or somewhat of a pretender that got a halo.
Well, I think it's the one sector where you've seen the market make this differentiation. Look at Adobe over the last week. Look at MongoDB. I think the market's voting there that those are not real players in the AI space. And then you look at Broadcom, and frankly, some of the Asian semis actually might be reasserting themselves. Taiwan Semi as an example. But tech speaks to a sector that's very, very split. Is that a foreshadowing or harbinger of what the broader market may have in store after, frankly, 2 pretty broad years?
I'm thinking this must be a really difficult time to be a technician, because no matter, I'm talking the end of the year, because no matter what today says, tomorrow when you turn the calendar into a new year because of tax-related selling that could take place, it's really hard to try and gauge where we could go within the next month or so.
Yeah, Scott, it's why we spend more of our time trying to evaluate the character of a market. And really what I would want to see, or what I would have to see to really change the longer-term view, number one, does credit really deteriorate here? I don't think there's a ton of evidence of that yet. Most of our package of credit indicators are still pretty benign. I think people have gotten very wrapped around the axis about, is inflation about to make some imminent return? Well, if so, the market, I don't think, seems to believe it. Consumer discretionary is acting a lot better than energy. And that was the race, that was the pair that really signaled it in late 21, early 22.
Well, let's be fair. Amazon and Tesla are the big game in town. So if you take those out, does discretionary look as good as it would?
It looks phenomenal. And frankly, it's getting better globally. And I think that's what's been misunderstood when you look at the cap-weighted discretionary sector. Equally weighted discretionary has been fantastic here since the election. And when you look at it globally, I would just pay attention to what's happening in Europe. You have some European discretionary stocks that have been in bear markets for 2 years, actually starting to get better. LVMH, Hermes, Moncler, Richemont. Is that some signal against very low expectations that maybe China's starting to turn here? Those are at least ideas we want to be open to in 2025.
Are you suggesting we could go back to, I mean, Josh Brown was talking about this today on halftime, synchronized global growth?
Pretty remarkable idea. I haven't heard that one in a while. But
I know, but that's why he brought it up. But you're almost alluding to something like that.
I think if we're looking for areas where there's hints of improvement on the charts, yet the bar of expectations are remarkably, remarkably low. I mean, the PMI in France right now, where all these European discretionary stocks are, is 41. What's a pretty good rule of thumb? When you see PMIs in the low 40s, buy the stocks. The bar of expectations has been lowered to such a degree where it's tough to surprise on the downside further. So I think something might be starting to brew there. You have the currency weaker, you have the rates down. Is that the setup for the equities to show up on the other side?